I think we probably should just go ahead and get started here to try to keep Nicholas on time. So my name is Chris Wetherbee. I'm the Senior Transportation and Shipping Analyst from Citi. It's my distinct pleasure to be hosting the LNG shipping sector panel discussion for this afternoon. We have the enviable task of batting cleanup following what was a pretty solid lunch up there, so hopefully we'll keep everybody well entertained and at least partially awake here. So I'm very happy to be joined by three distinguished gentlemen to my left here. So we have Jonathan Cook, who's the CEO of Flex LNG. We have Mark Kremin, who's President and CEO of Teekay Gas Group, and we have Mr. Christos Economou, who's the founder of TMS Cardiff Gas. And so there's going to be an opportunity to kind of run through lots of different topics, and we certainly would encourage audience participation. I think that would make it much more interesting for everybody up here. But in the interim, I'm going to kick off with some questions, and we can kind of go through. I'll give each one of you guys opportunities to sort of answer. But if you do feel passionately about any of the questions I ask your fellow panelists, feel free to jump right in. I think always the best way to frame up these conversations is a little bit of a setup on what's going on in the market as it stands today. So, Jonathan, since you're right here, I was wondering if you wanted to kind of give us your view on what you think the current environment is. We've seen a probably better than expected market in 2017 transition over to what is still a pretty decent 2018. So if you want to give sort of your view on what the rate environment looks like today and maybe what you're hearing from participants in the market in terms of the strength and the duration of what we're seeing from rates, that would be a great way to start, I think. Thank you.
Sure, thanks. It's a pleasure to be here. And when you talk about the market and the current environment, talking about near term, 2017 finished off strong, but I think that a lot of that was on the back of stronger than expected demand in China, and but also a good share of that is the typical seasonality that we see every winter with winter buying. So the second and third quarter of 17 was probably one of the worst markets we've seen in the past few years, with lower rates and even lower utilization. But then coming into the winter market, there was a lot of demand for LNG in Asia, and that pulled a lot of ships out of the spot market, and some of the major charterers took ships on multi-month type of arrangements, so then further reducing the availability in the spot market, and consequently spot rates went up quite significantly, as did the utilization factors. But now, as we're coming out of the winter, which may not seem that way with a new storm coming overnight, but the rates are softening a bit. So we expect that 2018 to still be kind of a transitioning period. Looking at the order book, there are a lot of ships scheduled for delivery in 2018, some of them ahead of their projects, so they could be trading in the spot market. But by and large, expect 2018 to be much better than 2017 on a total year average basis, and then expecting a strong winter in the 2018-19 winter period.
Great, that makes sense. And Mark, maybe you could chime in a little bit in terms of this sort of lull that I think some of us expect in the market here in the intermediate term. Jonathan mentioned the fact that we have some of these ships delivering probably before we're going to see some of the projects that they're specified for ramp up. So how do you think about that? And is 19 and then 20 kind of off to the races in your opinion? How do you think about sort of that intermediate term demand and supply environment?
I think I, first of all, agree with everything Jonathan said. So if we start with China, that's a really good story. Last year, this now the second largest importer after Japan, and rates did have a nice spike over the winter. They've come down since, and I'm not sure exactly where the bottom is. They've softened a little bit, but I think this year we're certainly expecting better than last year. We're forecasting somewhere in the 40s or 50s on a TCE basis, and that'll go up every year. So 18, we think 19 will be better than this year, and 20 better than the year after. I think the thing for the interim, what we are seeing is shorter terms. We're not seeing a lot of long-term charters, certainly not the 20 years, but even the 7s and the 10s, charters seem reluctant to enter into right now. So in that lull period, I think we're going to have a little softer year this year, but gradually increasing. And hopefully when it does increase in 19 and certainly 20, we can get back to the longer-term charters that we used to see.
When you say long-term, just to follow up, are you thinking 15-ish or so?
Probably shorter, as you say. The 20 years seems to, there should hopefully still be some. We used to do the 25s and the 20s with folks like Rasgas. That certainly has come down, but maybe Anadarko or the project specific, like the Arctic 2 project should be longer. But yes, in general, even the longer terms are coming down to 15 years or so. And as much as anything, it's a reflection of the sale purchase agreements are getting very short as well on the LNG side.
Got it. And Christos, from your perspective, I think your company put in an order, and I think with a 7-year deal attached to it, time charter attached to it. How do you think about sort of the dynamic of the spot market development and then matching that versus how you want to manage your fleet with spot versus contracted capacity? I mean, what is the spot market, what sort of development of the spot market do you look for over the course of the next couple of years?
Let me just give some history. We started the business in 2011 as a spot player. We bought the 3rd ship ever sold in LNG on a second-hand basis over the last 15 years. And then we placed an order for 4 ships where we've been trading in the spot market since then. Now, fast forward 2017, 18, that's pretty much 4 years in running. So we see, as John and Mark correctly said, a stronger environment, obviously, driven by Chinese demand and Asian demand. Our philosophy is, as correctly Mark said, contracts are driven by SPAs. SPAs now are shorter. The last one signed, I think, was 15 years by Trafi. That shipping will match that or be shorter than that on the term business. So we signed up for a minimum of 3 new buildings with 7 to 10-year options for 2 of our customers actually at this point in time. And we look to grow that organically along with the spot side of our business. So I don't have a ratio right now. I think it's driven by customers mostly, and then the expectation on the spot market. I'm a little bit more aggressive than John on expectations there. However, I think we all agree that we're looking for an exciting market over the next let's say 3 years.
Sure. So I think all 3 of you actually mentioned China in your opening remarks here. So I think that's probably a natural place to go next, and certainly was a driver of significant, rate improvement as we went through the second half of 2017. So they did a lot on the spot market. How do you think about sort of activity on the contract side as you move forward? Is it going to be more just sort of, satisfying from the spot side, or will there be a higher degree of contracting for Chinese cargoes, Chinese destined cargoes?
I'm happy to take on China again because there's 2 big parts to the China story, and maybe I'm jumping ahead a little bit. But one side is the demand on the LNG, but the way that we've really seen a difference from China is in the financing. So right now we still have the world's largest LNG order book, and without China, that would have been terribly difficult to finance. So the order book, we started ordering around 2013 to 15, and got about 21 ships on LNG. But China's been a massive story on the finance side. And I don't want to take too much time, but on the building side too, Hudong is a good yard, and I think that. When you look at least at Chinese requirements, you should see those bottoms come out of a Chinese yard like that one.
And Jonathan and Christos, feel free to comment about your thoughts on China in 2018 as well. But I guess one of the things I wanted to follow up with is gas in the mix of energy in China, and sort of how you guys think about that over the long run. I think in 2017, rough numbers, kind of 20+%. Where do you think that can go? You have sense from where they want to take that number?
Yeah, I think that we're seeing the increase in demand for LNG in China is kind of exceeded everybody's expectations last year, and that the depth in that market is so deep that should be able to continue with their fuel switching program and just general kind of organic energy growth. So from that perspective, I think that's here to stay. We're seeing more interest in the Chinese buyers looking at longer term contracts for LNG out of the United States. Up until now, all of the production that's under construction in the U.S. has not had any Chinese buyers until very recently. So I think that's a dynamic that we'll see for the next wave of LNG production.
Okay, that's helpful. Maybe mixing this in a little bit with the production side. So I think there's some estimates out there for about 25 million tons of annual capacity of liquefaction coming online in 2018. One of the things I struggle with as an analyst here is trying to understand the relationship between the amount of LNG in the world and the demand on ships. And clearly ton-mile demand is part of that. China is part of that. So when you guys think about your internal models, how do you sort of translate that demand number to required ships? And I'm taking aside sort of some of the contracts, the offtake contracts and those kinds of things, just broadly speaking, when you're trying to do that supply-demand math, how do you guys think about that?
Well, I think that we've seen the math that the various analysts have done, but then also now that through the course of 2017, the Sabine Pass production has really started to get its legs under itself and has been continuing on a reliable basis, and we've seen what the trading patterns are from the ships or the cargoes that have been shipped out of the U.S. Gulf. So a year ago, I think we would have been talking about for every million ton of LNG production out of the United States requiring about 1.5 ships. But in fact, now we're saying more like 1.7, 1.75. A couple different reasons for that. You've got obviously the demand in Asia continuing to stay strong, so that maintains that long trading distance and ton miles. Another factor that we've seen is that the Panama Canal is not something that every shipper can rely on from a scheduling or reservation perspective. And so there have been many occasions where ships have had to go the long way, whether it's loaded or in ballast, but in either event, obviously adding time to the voyages. And so I think with those factors, the ton mile demand as we look going forward, like Christos said, the next 2 to 3 years is going to be very exciting. A lot of the new production that's coming online is more heavily weighted out of the United States, so that obviously is good for shipping.
Yeah, I agree with John. I mean, when John was working at our organization, I remember we fixed the first CNOOC cargo. So they had basically very little experience, and we helped them, do those first cargoes. They, then took an FSU, and now they're growing that business. So, going back to your previous question, I think Chinese demand is in its infancy. However, given that, in my view, and from the European industrial players that we're discussing, new power plants, are likely to be gas-driven. That takes a little bit of time to be able to get into the energy mix of electricity production, industrial production, and domestic production. So, it will take a little bit of time, but, I think, that growth is going to continue there. And on the shipping side, as John said, we see a lot of it through the U.S. Sabine Pass was a game changer. Yeah. I mean, going down there is really exciting, obviously, but in itself, the fact that, they had one or two problems with one of their tanks, gives, as a shipper, as a customer, they have a lot more mismatches to take care of.
Yeah.
So I think what everybody forgets, it's not just a model, right? It's ships that carry gas around the world that goes to China. So that in itself needs to have some elasticity. Otherwise, people get caught out, and nobody wants to get caught out. So I don't think there's a golden number, but the more volume that comes online, the more spot there is, and the better it is for everybody involved in the supply chain.
That's a great point, that these routes actually exist in the real world and not just on the spreadsheets that guys like me maintain. So I appreciate that. Given your spot sort of exposure, I guess, you touched a little bit on it, but I was hoping you could maybe elaborate a bit more on sort of some of the, I don't want to call them inefficiencies, but sort of there are some dynamics where you have cargoes that are spoken for by multiple individuals that may deviate from original routes and those kinds of things, and maybe I don't want to say inefficiencies, but certainly add to the time at sea. So how do you see that kind of playing out, and maybe thinking about that in the construct of how big do you think the spot market becomes over time?
Well, I don't know, Mark, you want to take it?
No, feel free.
So at some point when we were initially in the space in 2011, spot market for cargoes was 5%. Today, depends on who you ask, because nobody really wants to tell you, I believe it's between 20 and 35%. And please jump in if you think those numbers are off. So that means that you had a 5% growth. So that's 100% pretty much almost every year since over the last 7 years. So I would say the model is evolving to being more spot, and the ships will follow the cargoes as well. So at the same time, on the shipping side, the spot market, when we were trading, there was like 10 ships, right? Now there's like 100 plus. So that grew, I would say 2 to 1, realistically. So now it's a trade. So I don't think there's a number per se. However, it's definitely growing exponentially versus cargo. That's what I would say.
Got it.
Or in multiples of.
Sure.
Maybe
and Mark, I don't know if you had some comments on that.
I guess two things. One that Christos touched on is the trade, whether it's the Trafigura or Vitol or Glencore, whoever it is picking up enormously. They've become a fixture in the market, and I don't think they were 5 years ago. They were a major player. And so that's on the trading side. The other thing that just boggles my mind, there's so many inefficiencies, and one of our favorites is we're building a regasification terminal in Bahrain, which is 40 nautical miles away from Ras Laffan. And they will not take, Qatari gas. And so you see all these inefficiencies there and around the world, which will hopefully lead to inefficient shipping. So,
which is good for all of you guys, that's for sure. Do you think that as the market sort of evolves and matures, because I think it's probably fair to say with all this liquefaction production sort of ahead of us and this ramp up, are we still relatively early on in this process where we need to see maybe more of a spot market develop to try to arb out some of these inefficiencies, or do you think they are fairly sustainable just given the structural dynamic of projects coming online with specific offtake agreements that you'll see a longer run sort of this ability to kind of arb out, take advantage of these inefficiencies? I don't know, John, if you have a comment on that.
Yeah, I think that the way the LNG supply contracting has evolved is really important, because you've got not only shorter duration contracts, but also the whole idea of destination restrictions is kind of gone away, and with the destination flexibility, you would think that would allow for some of these inefficiencies to be taken out of the market and things to become more efficient. But one of the things that we're seeing is that because of this destination flexibility, a lot of the LNG interests are uncertain about where they're actually going to be selling the cargoes. And when they're uncertain about where they're selling, they're uncertain about what their shipping requirement is going to be. Mm-hmm. So, you dial the clock back, say, 10 years, and it would be point A to point B, require so many ships, do a 20-year charter, get the ship owner to sign the shipbuilding contract at the same time they do the charter party. All that's gone. And so now that goes to the whole concept of the spot market or short-term charter market becoming a much more prominent feature in the market.
So are any of you on the panel sort of thinking about meaningful changes in the chartering strategies of your fleet? You know, Mark, obviously you guys have had a historical long-term focus. Is there any sort of reason to think that that's not the right way to approach the next 5 years and, you know, sort of new opportunities? I mean, you mentioned before 15-year duration, so I would definitely characterize that on the long end of the curve. Sure. How do you think about that going forward?
So you're right. We have an average remaining duration of about 12 years in our fleet of the 50 LNG carriers we have, but I don't think that's the future. There's been a lot of things. I think the risk reward has shifted a bit. The ships have changed so fast, whether it's the propulsion from steam to ultra steam and DFDEs and two-stroke and slow-speed diesels, whatever it is, the cargo containment systems, everything about the ship is changing so fast that the residual is a bit of an issue. And I think right now, today, the returns you can get on a medium-term charter aren't really there. Mm-hmm. And so we might be just as happy with a big fleet, and we have a larger fleet now, so on a portfolio basis, it's okay to have a little bit more of the short term until I think until the returns improve on some of the longer ones. I think every owner will always prefer and always will seek out a long-term charter. That's what we're going to do. But if you can't find a good one, and I'm not sure there are a lot out there right now, we'll sit back and wait till there are.
Yeah, got it. Christos, from your perspective, you've been more on that spot side. You mentioned secondhand opportunities. You know, how do you think about sort of the next 5 years building out your business? Like you said, the last one was done with a 7-year deal on it, but you've already had some spot exposure. Where do you want to take that going forward?
I think, you know, between the companies sitting here, I think Mark is on one side of the spectrum and John is on the other side of the spectrum. I think we've played the spot game. We know what that is. It's going to be part of our DNA. However, we're going to probably be a mixed bag between those two, I would say. So, of course, we're comfortable with the exposure and we get excited. However, we see ourselves as more of an industrial player, and that's the approach that, you know, current shareholders, whether it's the family or other financial institutions that may be part of our, you know, current JV structure, I think want, and I think, you know, that's where we see. So as Mark said, yes, in today's market, things are not greatly appealing on the terms of business. However, you know, there's always opportunity, and we believe in the spot market as well. So, you know, if I answer your question, I would say we're mostly going to be spot focused with some term business to kind of level that off.
Got it. John, sort of same thoughts from you, or how are you thinking about this?
Yeah, I think that you know, we're kind of aligned with what Christos is saying in that you know, right now we're effectively long 6 ships when it comes to long-term charters, but and to kind of mention what Mark was saying is looking at how the returns need to be and looking forward over the market, you know, as we expect to see it evolve in the next 18 to 24 months. We expect to see the opportunities for multi-year, longer-term charters improve significantly, and that's where we see the opportunity to then start diversifying our contract portfolio, if you will, and add in some multi-year charters. I know that you know, Christos has good experience with being able to fix multi-year at rates representative of a high spot market. Mm-hmm. And you know, we've seen that in several instances back when the market was you know, kind of in a tighter scenario back in 2011, 2012. There were, you know, probably a little over half a dozen ships that were chartered out on 3 to 5 years at rates kind of representative of the then spot market. So we expect to see those opportunities come back as well.
And then one question I wanted to ask everybody to get their opinion on, and I do want to transition a little bit to FSRUs in a second, but when you think about the carrier side, just over the course of, I think we can all agree that there's a deficit of ships as we move out into the next few years because of the production that we can see coming online. But what do you think those numbers roughly are, and when do you start to expect to see an acceleration of that forward ordering? There was, one of your competitors was out this morning with an announcement about a new vessel order. Kind of curious how you think about that development. What is sort of that number of ships that we're short?
Teekay's in the by 2020 we're in the teens, including the orders that we're seeing from the peers. So we'll agree that there's a deficit within 2020.
Within 2020, that's the year to think about.
We're conservative compared to the Wood Mackenzie's and the Potens and obviously the GTTs of the world, who are well into the 20s or more.
Got it.
Yeah, and keeping in mind that if you order a ship today, you're likely not going to get delivery until the middle part or second half of 2020. So, we expect to see that tightening become more evident as the charterers are in the market ready to transact, which is typically 6 to 12 months before they actually need the vessel. Mm-hmm. And they'll have to be tapping into vessels that are either on the water or available out of the existing order book.
Got it. In terms of FSRUs, I guess, how big an opportunity is that? I mean, we hear about it from a number of players in the space as something that they're interested in. A sort of finite amount of folks are actively participating in that market. But, I guess, when you size up the opportunity, how attractive is it still to sort of start your engines now, I guess, is the way I'm thinking about it, to kind of get the ball rolling on FSRU investments today? I don't know. John, you want to start with... You're close to this, relatively speaking.
Yeah, unless either of the other guys want to take up. But no, I would say that if you think about LNG as being the long negotiating group, and everything seems to take a long time to develop and get done, FSRUs are probably the next step in that theme. But so I guess. From a long-term perspective, I'm pretty bullish on the FSRU sector because, as we go around and talk to various customers and things like that, just about everybody that we meet with has got a business development team looking to create new market access,
yep.
To create, increase the demand profile, and as we've seen over the past 5 years or so. That most of the new market access has been created via or through FSRUs. So from a long-term perspective, we're pretty bullish on the FSRU side of things. It's something that to be successful, you've got to start that business development effort and be present in the space. It's completely different from shipping. An FSRU is not a shipping deal. It is an infrastructure deal. The contracts are completely different. You've got country risk. You've got counterparty risks that are typically different. So there's a lot of things that need to be taken into account. On the near term, there are some challenges. I think that there's a lot of available FSRUs that. Mm-hmm. That were either ordered speculatively or have been delivered either early for their project, or the project they were ordered for hasn't quite come to be. So from that perspective, I think there's the next couple of years is going to be a bit of a challenge.
Christos, is that something that you guys would consider participating in?
That's for the rest of the panel here. I believe in terms of numbers that, I agree with John, it's an industrial play. However, it's pretty simple ship with the regas kit, so pretty much, anybody can operate. Okay, there's some barriers to entry, but for me, the real issue is that there's 30 ships in the water, and that's a small market. And if you take one of these and you try to fix her around, she's not that easy to move. So I would not think about that infrastructure play, even though I see shipping as a midstream business, and I think that's what Mark and the Teekay team has created. So we're going to focus on what we know. If we get a customer that wants to fix something, great. But I think it's more for other people to enjoy, where they have some value add where we don't.
Got it. And Mark, I mean, it fits sort of the term structure that we've all sort of come accustomed to with Teekay LNG. So,
Sort of. I tend to agree with my colleagues here. We calculate there's about 9 or more uncommitted ships right now.
Yep.
Chasing projects, to Jonathan's point, when exactly are they going to happen is unsure. And they typically end up with developing credits. So I'm not sure it's the type of credit that we've typically wanted in our system. At the same time, I'll agree.
Depends on the rate.
It depends on the rate. The risk-adjusted
Everything
returns,
depends on
of
the
course.
rate, right?
But obviously, long term, it's a big feature of the market.
Got it. I want to see if there's any questions from the audience. We have time for maybe one or two. Would love to get people involved to the extent that there's interest. I think from my perspective, I guess I did have one more sort of follow-up on the FSRU side that I guess I was just kind of curious about. And this does kind of marry into the carrier market, is really how much adoption or sort of penetration, maybe, John, do you think you can get from FSRUs into into the market? I mean, how many more markets can be opened up? I think there is this potential opportunity from a carrier perspective. If you could have multiple destination points, more destination points open, and you can do more of a complex sort of shipping operation. I guess I just wanted to get your sort of sense there. How far along are we with the process? Seems like maybe we've gotten a bit out over our skis, but over the long run, is there a lot more for this to go in terms of FSRU penetration?
I guess that's a little bit hard to answer, but I would say that there are areas of the world that don't have FSRUs that kind of are a natural fit for it. Thinking about Southeast Asia, for instance, and you've got the two in Indonesia, but I'm thinking more Philippines, Vietnam. There's still quite a lot of discussions about potential projects in South and Central America. And then, of course, the whole Pakistan, Bangladesh, kind of near Asia part of the world. So and that's before you even start thinking about more developed countries with the drive for a more either security of supply perspective or even on a seasonality perspective.
Yeah.
Kuwait was created to provide gas in the summer season when they have the high load from AC and all that kind of thing. So that was a project where it was kind of October to March or October to April time frame, and then the FSRU being available for other things in the off season. Same for the first project in Argentina, but once the project in Argentina got going, they never let it leave. So
yeah. So Christos, last question for you. Incremental capital, where are you putting it today? What's the most interesting thing for you and your shareholders?
I would say by definition we have options to grow the fleet. We have options in 2020. I think this is a game to be played by the industrial players existing. Anybody who tells you differently, I think, is just a speculator. Probably, at the point of being a gambler. We believe more in risk-adjusted return, as Mark correctly said. Maybe their adjusted return is a little bit more longer term than ours.
Fair enough.
What I would say is we've paid the entry ticket, and I think we would grow organically through new buildings. If we saw opportunities to get involved with other existing players where we could see eye to eye, sure. However, in our industry, it's generally one captain, one ship, unless there's, some sort of an opportunity to see otherwise. So I would say in LNG, we're in the carrier business, so naturally it would be through existing relationships that we have.
New buildings, most likely.
For new buildings and at prices pre-today's sign-up.
Got it.
Yeah.
All right. Well, thank you, gentlemen, very much for your time. I really appreciate it.
Pleasure.